Today we are looking at 17.3, which is doing a horizontal analysis. So we are going to look at doing a horizontal analysis on an income statement and also doing a horizontal analysis on a balance sheet. So remember, in the prior two sections we were doing vertical analysis. This time we're going to be looking at going horizontal. So in that case, what a horizontal analysis is we are essentially comparing one item on a financial statement with the same item on a previous period's financial statement. So if you remember, when you've been looking at both of these income statements and balance sheets, we've had our current period and then we've had a prior period. And what we're doing is looking at the difference between those two. So you're going to need to do two calculations in order to do a horizontal analysis. So what we do first is we take our current period amount and subtract our prior period amount. If there was an increase, we leave it in the positive. If it's a decrease, we're going to put it in parentheses to signify that obviously it went down. Okay, so that's our first order of business, is to take current minus prior to get the increase decrease. Then what we do is we take that amount, notice that these two are the same, the increase decrease amount, and then we divide it by our prior period amount, which we just have numbers here. We'll see it here in an example on the next slide. But we take that increase decrease, divide by the prior period, and that's where we get our horizontal analysis ratio. Okay. So when we look here at the horizontal analysis for an income statement, notice that we have the current year and the prior year. Okay, and then we have the increase decrease amount and then the percentage. So if we were, for example, to take, let's just say, let's do a smaller one here. Let's talk about advertising expense. So we take the current year minus the prior year, and it was an increase of 180. And then we take that 180 divided by the prior period, which is 4,500, and you would wind up with 4%. Notice that down here on the supplies expense store, that it actually went down from the prior year to the current year. So you notice that it's in parentheses. That means it was a decrease. And then obviously the percentage would also be in a decrease, so you'd want to make sure that that is in parentheses as well. So that's an example of a horizontal analysis on an income statement. Here's a horizontal analysis of a balance sheet. Okay, so if we look here, you can take, for example, cash. Okay, we had our prior year, current year minus prior year. It was an increase of 48,000, which this must have been the startup year if we only had $5,400 and we went up to 54. But you can see where the percent is huge then. If for some reason, like our petty cash stayed right at 250, then in the increase decrease, you would just draw this solid line to indicate that there was no change, and obviously your percent would be 0. If, for example, it goes down like it did with merchandise inventory, same thing. You're going to put the increase decrease amount in parentheses, and then also put your percentage in a parentheses as well. So that's a horizontal analysis. We're going to do our work together, 17.3 next, and then you have your assignments for tonight as well.